What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on crude oil prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video I will show you the price action for the last several months. And as you can see, I made a quick analysis back in October of this year, and let me show you the video where I made this analysis. It was the video that I published 3 weeks ago regarding the MMTLP case, and my main assumption was that we have to land lower. As you can see, it was the bearish pattern, which is bear flag. And right here you can see that we hit exactly the range that I predicted in my video. And if you want to know more about the power of technical analysis, just subscribe to my channel and drop me a line in the comment section if you are willing to know more and if you want to be a successful trader. On top of that, just hit the like button for YouTube algorithm and this video will be pushed to much broader audience. So then I will show you some fundamental news and how you have to do the analysis on different assets from scratch. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next from the price action. So let's start with the price chart. To start the analysis from scratch, you have to take a look on a bigger picture, and as you can see, we have quite interesting price action. The price for now is at the level of about $76.23, but the lowest point was negative, and probably you remember the spring of 2020, when the prices for one day was on a negative side, and it was ridiculous times. But it is quite obvious that we have to start our analysis from this point. And I don't want to make a breakdown from this bottom to this swing high that was set back in March of 2022. It was just one wave, and this was the second wave. And again, this point, let me show you that we are again trying to move higher, and we have a retracement. So this means on a greater scale, let's take a look right here. We have something like this. This might be the first wave. And here is the bottom of the second wave. And we have to see another several waves to the upside. Let's make this wave invisible. And right here, this bottom shows that we again have a couple of waves. We have the first wave and the second wave. And let's make it like this first. And we are seeking the bottom of the second wave. Then we have to see the third wave, fourth and fifth wave. And the top of the fourth wave should be at the top of the fifth wave. And we have to switch the degree of this wave. And right here we have this retracement, and I have to say that it is quite technical, and in just several minutes I will show you what should we expect next. But for now, let's continue with the fundamental news. First of all, what you should know. You should know that if you click on this tiny icon, you will see the latest news regarding this asset, or you have another option. Just type in Google search bar crude oil price and switch to news tab folder, and you will see all the news regarding this asset. And let me show you this article that was published on Reuters, to be precise, about 9 hours ago, and it's titled "Oil Prices Slump as Fundamentals Reassert Themselves." And let me go to this. By most measures, the oil market is the weakest it has been since late June, before Saudi Arabia and its OPEC plus partners reduced by crude production by more than 1 million barrels per day. Front-month prices and calendar spreads have retreated sharply since the end of September, reversing much of a spectacular increase over the previous 3 months. And let me go to these bullet points. The front-month Brent futures contract closed below $80 per barrel on November the 8th, down by more than $17 or 18% from the end of September, and only up $7 or 10% from the end of June. Brent's 6-month spread ended in a backwardation of $1.3 per barrel, down from $9.33 at the end of September, though still above the 8 cents just before the end of June. Inflation-adjusted prices have retreated to an average of $84 per barrel in November from $93 in September. The 6-month spread has averaged $2.3 so far in November from $5.72 in September. And the outlook is quite controversial because let me show you this. We are at the beginning, basically in the middle of November, particularly in the middle of November, and we are in the season of high demand for different type of power sources. And oil, despite all these catalysts, is in downtrend, and that is why we have to realize that market from the technical standpoint acts in contradiction to the fundamental news, and this is very important. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, first of all, let me show you this movement in details, and let me zoom in from this bottom to this top. We have completed 5-wave structure in our first wave, and again, I don't want to dig deeper inside this structure. Let's put it this way: this was the first wave, second to this lowest point, then third wave, fourth retracement, and fifth wave to the upside. And because of this, because that we completed all 5 waves, we have to see the retracement for the entire wave from the bottom to the top. And you know that 5 waves on a smaller scale, it is nothing else but 1 wave on a bigger scale. And let me show, first of all, let me show you this wave like this. And we have to pull the Fibonacci retracement tool from the bottom to the top. And we have to realize where might be the trend reversal. And as you can see, we have double confluence reason where the price action had to land. First of all, we had this bear flag, but it is just a simplification of much deeper price action, and bear flags might have inside them, might have quite different structures, but in general, in the majority of cases, you will have this type of pattern when you can see right after quite harsh movement to the upside, harsh decrease, then you have a consolidation phase in the shape of ascending channel, and it is a bear flag. And the price target for the next leg to the downside, and these type of channels usually break to the downside. The price target will be completely similar price action that, let me show you like this. I don't need this tool, but I want just this arrow. And we have to see, as you can see, it is identical arrows. And this was the first sign. Second sign is the most probable range of trend reversal. And in the more than 75% of cases, assets should respect this range. And we have to see at least some kind of reaction to the upside. And this reaction is happening right now. As you can see, we had 1, 2, 3, 4, 5 red candles, and this is the first time when you can see the green candle, and it is pure evidence that this range works perfectly well for this asset. And where we might land to the upside, and is this retracement ended right here. So let's take a look on the smaller time frames, and let's switch to 30 minutes time frame, and let me show you this price action in details. So from its swing high, from this point, let me mark this movement to the downside as the ABC correction, and here is the B point, and we have to have one more leg to the downside to complete the C leg. And you know that the C leg should have a shape of 5-wave structure. And it is quite tricky to make this breakdown, because on the first glance, we have the third wave quite choppy, and it has much more lags than just a real motive wave to the downside, and it is the shortest one, and it is contradicting to the main rule of Elliott wave theory that the third wave shouldn't be the shortest among other impulsive waves. But in general, we have again 5 waves in it, and again the latest wave should have 5-wave structure in it. And right here we can clearly see these 5 waves from this swing high. This is the first wave, second, 1, 2, 3, 4, 5, third wave. This tiny is the fourth wave, and potentially this is the bottom of the fifth wave. And if it is the case, we have all the chances to see a much higher price action, at least to bounce to the upside. And if my assumption is correct on a greater scale, and this is the bottom of the C wave for entire retracement, this means we have to see the bounce that will break several swing highs, several previous swing highs. And if you want to catch this trade, you basically have a decent opportunity with the downside potential of about, let's say, 2.5% at the lower border of golden pockets range, and the upside potential to be most conservative. We have to pull the Fibonacci retracement tool from the top of the B wave, from the swing high to the swing low, and we have about 80% probability to hit $78.31 and about 65% probability to hit 0.382 level at roughly $80 mark, and which implies, as I already mentioned, about, let me show you like this, about 2.5% of a downside potential, with the same time of at least 2.8 and 5.72% to the upside. Definitely, it is less than desirable 3-to-1 risk to reward ratio, but it is the most conservative price targets. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. In this case, you won't miss my next video, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life, I'm crazy, I'm mad. Doing no cap.